The time for debate is over. The blame game, the political blame game is futile. It'll get you nowhere. You must take action. You must protect your finances. You must protect your family. Well, Washington is not going to do it.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Jerry Robinson from followthemoney.com. Jerry, thank you so much for joining us today.
It's great to be here, Elijah. Always good to see you.
For the last couple of weeks, we've seen quite a rise in precious metals, and it seems like this whole idea of a commodities bull market that you've been talking about for so long, we're finally seeing that. So your perspective on where exactly we are in that?
Sure. Well, yeah, we have been talking about a commodities bull market for some time. We were just talking about that off the air. Our Follow the Money podcast, we put out a big episode on the coming commodities bull market back in 2020. 2021, we saw a really nice boost in many commodities, although gold and silver were kind of lagging behind. Gold was down about 3.5%, silver down about 11 or 12% in 2021. But that seems to have begun to shift this year as inflation is really working its way into the minds and mentalities of investors, but also in just consumers and producers. So it's causing people to reassess, and especially against a backdrop of these falling stock prices. I mean, today's the 23rd of February, as you mentioned, and we've seen a pretty sizable pullback in the stock market. In the indices, it hasn't been as pronounced because the indices are kind of structured in a way to kind of keep up the facade. But whenever you look at underneath and you see some of the actual internals of the market, we have seen some serious selling in many sectors that we haven't seen, that many people didn't think we would see. And I think against this backdrop of declining cryptocurrencies and declining tech stocks, you really can't say enough about the durability and the just the price, the stable price that we're seeing of gold. I mean, gold always looks dumb in a bull market of stocks or cryptos, and then it always looks smart whenever you're in the bear market. So it's kind of funny how we have that relationship with gold and silver to that extent. But commodities we think are going to continue to remain hot in 2022, and they're still relatively, if you just take a chart and compare the technology sector to, say, the energy sector, you'll see that we are very, 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 very far below where we could go based on previous cycles. So we believe that there could be a lot of potential upside here. Remember back in 2008, Elijah, when they began to, create all this excessive amounts of money and they tried to solve the economic crisis. The amount of money that they printed was actually extremely limited compared to what we've seen them dump into the markets over the last, couple of years. And so because of that, we would expect to see, more distortions and longer lasting distortions than we saw from the first bout that we had back in 2008. So I would expect this commodity cycle to be longer, to be more sustained, and it's clearly widespread. Doesn't matter if you're looking at agricultural commodities or base metals or energy, or even in some cases, as we mentioned, precious metals. Everything seems to be joining the rally now. So that's good news for commodities. It's not good news for people who have to buy them, right?
That's definitely true. And it seems like we're going to continue to see inflation. Therefore, if we're just seeing the building blocks of everything we buy, all those prices are going up. So we're going to continue to see inflation here, it looks like. You recently have been talking about inflation and really how to protect yourself against it, really for all age groups and also retirees, people who are looking to retire soon. What can they do to protect their wealth in this time when it seems like their wealth is dwindling because of inflation?
It's really great. We just had a great conversation with one of our longtime financial advisors, a guy by the name of Mike Mitchell. We were just talking, and we were talking about how, because, this is a fellow who has been advising, many people for more than 40 years. And he has clients who are coming to him saying, look, what are we supposed to do here? Inflation year over year, the real number is not 7.5%. That's just the published number, so we know that real problems are lurking. Then you also have this problem of bracket creep, where you have many people who live in states, and I think Idaho is a state that is indexed. There's a few other states that are just popping on the top of my head that are indexed, but many states don't have bracketed or inflation indexed state income brackets, tax income brackets. So in essence, what's happening is people are getting squeezed by all of the inflation, and then they get a raise at work because of all the inflation, and then they end up in a higher tax bracket, even though all things being equal, they aren't making any more money. They're just trying to keep up with all the inflation. So people are really honed in. Some of the advice that I give in my book, and also we were talking with Mike Mitchell about, was the idea of health. It's something that many people don't think about. So many people think about, I got to buy gold. Well, that's true. It's a good idea to have some gold. Well, no, I need to go out and I need to trade all these dollars for other things. Well, you can do that too. But none of that really helps if you're stuck in a hospital paying for, $50 aspirins. I mean, it's not going to really help you to have gold if you are literally just, giving all of your other money away to the healthcare system. So many people, may not think about health as something to really focus on, but I would say that's a huge, huge thing. When you're young and you have the Adonis complex, you think, well, what does that mean? I'll always be healthy. But as you get older, you realize that's not the case. So, exercising and eating right, staying away from fast food, doing everything you can to stay active in retirement, to keep moving, just keep moving, is probably some of the very best advice that we can give to Americans, who are trying to protect themselves from rising costs. The problem is that where we are right now with all of the current inflationary pressures, the Federal Reserve, Elijah, is still leaving interest rates at zero. Now, all this tough talk that they've been saying they're going to raise rates and everybody's scared and running for the hills, interest rates are still zero. They're still buying government bonds, billions and billions of dollars of government bonds every single month. They're still buying them. So we are living in the period right now where the Fed has threatened to take action, but it hasn't done anything. It's done nothing. But the market is trying to rediscover the price that everything should be based upon what it thinks is going to happen. So that's why 2022 is a very interesting year, because if the market pulls back enough, then you run the risk of the Fed actually doing another pivot and moving back to easing monetary policy. So I think 2022, the Fed is really in a tight pinch. They've got a big, big problem where they lowered borrowing costs, created this incredible amount of debt that people took on, and easy money policies created all of these distortions. Now they have to raise rates, and now they're just talking about it. They're not even doing it. They're just talking about it, and people are freaking out. We expect that the Fed will be able to raise interest rates to probably somewhere about 2.5%. If it does, Elijah, big whoop, because the average interest rate over the last 30 years is 5.67% on the Fed funds rate. So 2.5%, if those are high rates, then I don't know what planet I'm on. Those are extremely accommodative rates. But this economy is so sick that it cannot even stomach the idea of a 2 or 2.5% interest rate. That's how over leveraged it is. So just take a step back and realize how ridiculous the economy is handling this current situation, how investors and everybody are reacting, because it shows you how sick the underlying economy really is. It really is. And you can't expect Washington to do anything to fix it. They're not going to turn off the printing presses. They're not going to stop frivolous spending. They're not going to stop, their warfare state. They're spending $800 billion a year, $800 billion a year on their warfare state. I don't really hear anybody balking at that on either side of the aisle, right? So it's fine. It's fine to spend nearly $1 trillion being the world's policeman. And you're going to have to pay that in interest on the national debt, according to many projections, in the next 5 to 6 years. So frivolous spending is a major problem. And as long as you keep the printing presses running, you can keep the frivolous spending going. So you can't do anything about Washington. I can't do anything about Washington. But we can do something about our own situation. And that's what we strongly encourage people to do. Take action, be proactive. Don't expect Washington to change its tune. You're going to have to make changes in your own household. And that's what we strongly encourage people to do through our website, Follow the Money, through our podcast, through our book, that we're always educating people to take action. The time for debate is over. The blame game, the political blame game is futile. It'll get you nowhere. You must take action. You must protect your finances. You must protect your family. Washington is not going to do it.
No, I was just at a hotel recently, and I was going into the omelet line, and they had a little sign saying, "Please be patient with our employees. There's a labor shortage, and things are going to be delayed and everything, and slow service and all that. But please be patient." And it just made me think about how all the stimulus, really since the beginning of the 2008 crisis, how much money has been pumped into the system. And now we're in a situation with the COVID crisis and all that, and even more unprecedented stimulus. And we're in a situation now where companies can't even find employees because, fundamentally, it seems like they're not going to be paying them enough. And the only solution, it seems like, is if wages are increased, right? Salaries are increased. And then that just exacerbates inflation. It makes inflation worse. So it seems like we have, I would say, maybe the general public has benefited a little bit from all this stimulus. We've been getting checks in the mail and all of that. But at the end of the day, I think it seems like what we're going to be seeing is this wealth transfer of really all of the stimulus, the impact of it really hitting us by, oh, yeah, we got a little bit of an impact, but really it helped the banks most of all, and we're going to be paying the consequence. We're going to be paying for it by increased inflation going forward. Is that your view and your perspective on all that?
Well, it's indeed true. It's always the same story. The same people always benefit from the policies that Washington uses. It's always the same. I brought up earlier the military-industrial complex. They got a big raise over the last year or two. In fact, over the last several years, they've been receiving many raises. The Pentagon can't pass an audit. They don't know where trillions of dollars are, right? But they get raises over and over and over again. And you know what, Elijah? The American people are fine with it. They don't say a word. They don't bring it up. They're fine with it. They let the warfare state continue to rob them of their hard-earned dollars. And they continue to give raises to the Pentagon, despite the fact that it's completely unaccountable. And, this is always the same. It's always the same. The banks are the ones who got bailed out. Big businesses got bailed out. You look at the COVID-19 situation, for example, we discovered quickly that Walmart and Lowe's and even the local cannabis dispensary were not just retail outlets, they were utilities. We also learned that many small businesses that compete with these companies and maybe aren't, grocery stores or whatever, maybe they're just small retail shops, that they weren't utilities, that they had to shut down. So I think people are slowly beginning to realize how it all works. and how Washington works slowly but surely, but maybe not, because the problem is that we have politics, right? Politics screw everything up. The factions. I always enjoy hearing people on the right talk about the founding fathers as if the founding fathers would, support their actions. When in fact, the founding fathers were against factions. So the fact that Republicans and Democrats exist, that would cause the founding fathers to turn over in their grave. That was the thing that they feared the most, was that we were actually going to have factions, political factions, and that we would hate each other. And that's exactly where we've come. So it's always enjoyable, perhaps tongue in cheek, to hear people talking about the founding fathers and claiming them for their political party. But in reality, the founding fathers would disavow them and tell them that they're part of the big problem because they operate in a faction. Factions are destroying our country. Politics and political factions are destroying our country. And many people, again, waking up sometimes just means waking up in the right-left paradigm, and that's not going to help. So if you just wake up and realize that one side of the aisle, one side of the political aisle is the problem, you haven't woken up. You're just literally in Propagandaville. So when you wake up and realize, you'll know you've woken up whenever red and blue both make you vomit. When you realize that neither side cares about the inflation, that neither side is calling out the Federal Reserve, that neither side is really concerned about, dealing with the warfare state. Not at all. There's no concern at all. So I think for the individual out there to really empower themselves, they have to cast off the political propaganda. They have to stop falling for the right-left paradigm. And that usually requires them to turn off the mainstream media, because the mainstream media cultivates that. It continues to tell us that we have to choose. We have to pick right or left. We have to choose Coke or Pepsi, when in reality, neither right or left is solving any of the most fundamental problems that we face. So that means that we have to do it ourselves. And again, it goes right back to what we were saying. We must go back to the place where we are taking care of our own situation and not relying upon friends, family, federal government to solve our problems.
And you mentioned earlier how one of the main things we need to focus on is obviously our health. And that's something that a lot of people don't really think about first when trying to protect against inflation. What other investments are you looking at to really hedge against this inflation going forward?
Yeah. So the key here, I think, in addition to PACE, which I think we brought up, maybe I didn't bring up PACE, but PACE is an acronym that stands for Precious Metals, Agriculture, Commodities, and Energy. So we teach PACE. We've been teaching PACE for a long time, since 2006. So that's one thing that you can definitely do. You can have exposure. I put about 15% of my total investable assets towards hard assets. So, gold, silver, and other types of commodities that have real value. That's about 15% of my total portfolio. Now, the other thing that I like to do is real estate. Real estate gives you pricing power because you can always raise the rent if you need to, right? So even if prices are going up, well, then you have some pricing power. Or your own business. Your own business is also very powerful this way. So I would say that if you can't start your own business, buy some real estate. If you can do both, that's even better. Have your own business and have some rental real estate. Those give you pricing power, and you need that in a time, especially if you're on a fixed income, or if you fear that you will be on a fixed income. And then obviously the stock market. I think right now, here we are at the end of February, or near the end of February. I think that we could, there already are several stocks that are very high quality, that have massive pricing power, that have massive earnings power, and that are not going to go away due to almost any factor that we can think of. They're just going to be, in fact, many of the largest corporations, I've told you this before, Elijah, are going to outlast the United States government. The United States government is not going to outlast some of these major corporations. So investing in some of these corporations that have massive pricing power is another strategy that I like to use. So I stay with real high quality companies with my stock portfolio. I don't think you can avoid stocks if you're trying to beat inflation. Historically, you just really can't ignore that space. But you need to be very smart about what you're invested in. So real estate, PACE, high quality stocks. There's several other things that you can do too, as I mentioned, even your own business, creating multiple streams of income. All of these ideas we teach at Follow the Money. But I think these are a few of the ideas that people can have. But again, going back to even what you said earlier, what we were talking about with health, there's so many things that people can do that they can just do right now. You can't choose everything about your health, but you can certainly choose what you put into your body, and that's really where it begins. And you can also choose to get up off the couch or not to get up off the couch. And that's something that's in our power. We need to do all the things that are in our power to be able to protect ourselves. And I think that, all of these are, great strategies. It's about having diversification. So I've met too many people over the years, Elijah, who think that they can find a silver bullet. They say, I'm going to put all my money into gold, or I'm going to put all my money into silver and that'll fix it. Or I'm going to put all my money into crypto, right? Or I'm going to put all my money into real estate, right? None of these are solutions. These are dangerous types of strategies because in that case, you leave yourself open to the rules of the game changing. The rules of the game can change at any time, and the rules of the game are made by the Congress, and they're found in the tax code. So you could go all into real estate, and then they could change the rules, right? And you would be out of luck. It'd be just too bad for you. You could go all into stocks, and then you could have a big crash and not see the price get back to where it was for 20 years, like it was back in 1929, right? So don't go all into one thing. And just because you may not like a certain asset class doesn't mean that, that you shouldn't be diversified. You want to find different areas where you can spread out your wealth so that you can be nimble as the rules of the game change. We've been saying this for a long time. There's still people who don't fully understand that. And I think that those are the people who are going to be really hurt when they focus way too much on one asset class and they're all in it. And I'm speaking especially to those who are heavily invested in crypto, especially. This can really hurt you. Diversification in your savings, diversification in your investments, and diversification in your income. Absolutely powerful to overcoming the financial challenges that we have in our country.
You mentioned you're speaking most directly to those invested in crypto, and it seems like we've seen such a rise in crypto, completely unprecedented. We've never seen anything like this in history before. I was just actually speaking to Chen Lin, and he was talking about how China is rolling out their digital yuan and how he expects other countries to do that as well. And we could have like three main cryptocurrencies in the world: the US dollar, the euro, and the yuan. So, but all digital, right? All digital cryptocurrencies. And this could actually kind of push out more independent cryptocurrencies like Bitcoin and Ethereum. We could see that really hurt those prices. Your perspective on that, as we see more countries moving towards central bank digital currencies, do you see that impacting the more independent, I guess you could say, cryptocurrencies?
Perhaps initially. I think perhaps initially you could see people who begin to onboard onto a digital dollar or to a digital yuan or to a digital euro. However, when you fast forward the tape, I think you'll end up with a realization that that's not the case. Because when you compare the 21 million Bitcoin that will ever be created to the infinite supply of the digital US dollar, it won't take too long, I think, for many people to say, which one is holding its value and which one is not over time, not tomorrow. I know that they're volatile, and so you may lose 7% on your Bitcoin today and the digital dollar didn't go down. But I'm talking about longer time periods, over a year, over 2 years, over 5 years. What do you want to hold? If you have to hold a digital currency, and so the other thing is that I think that's a wrong thesis that people will just use the digital currency that's promoted by the state and then no longer have any interest in cryptocurrencies, because you literally are creating education on digital assets when the government releases their digital dollar. Why do many people not invest in Bitcoin today? Well, because A, they don't understand it, or B, they don't know how to buy it. And that's usually the two main reasons. When the digital dollar is released and people know how digital wallets work, what have you done? You've just educated the masses on a brand new asset class. So the U.S., I think, by educating the public, they're validating the entire asset class. And that means that people will then look for other cryptocurrencies. I don't see a world where Bitcoin and Ethereum become victims of the digital U.S. dollar. I see the dollar as the biggest loser going forward. Digital, paper, or whatever they want to come up with, I see it as the biggest loser. It will not, in my opinion, be able to beat out decentralized projects that don't have the emission schedule that the United States dollar has. In any way, in any world that I can imagine.
We've talked about this a lot before, that it seems like the US dollar is, it is the world reserve currency right now, but there are competing currencies kind of warring for that status. So is it still your view that, the dollar is on its way out?
We've been saying this now since 2006, but we've seen a lot of people, Elijah, come along the way who said the dollar is going to go away this year, or it's definitely going to go away by next year, or so-and-so says that it's going to go away in this, that, right? So you and I have seen those failed predictions over and over and over again by so many people who've ruined their credibility by trying to say this is when it's going to happen. The U.S. dollar is declining in value because they're printing too much of it, but it's the world reserve currency, and world reserve currencies don't just tend to drop off of a cliff and go away. So what we have always said is that it's going to be a slow grind. It's going to be a long, slow, steady grind. And we think that the introduction of things like Bitcoin and Ethereum and other types of digital assets are exposing, especially when they have finite supplies, they're exposing the failings and the frailties of the current world reserve currency. That's why the United States doesn't have a digital currency yet, right? You would think if digital currencies weren't threatening to the United States dollar, they would already have one. If their digital currency is going to get rid of Bitcoin, why haven't they released it, right? If that's why, if it's going to destroy all the other digital assets, well, it doesn't need to even have regulations. All it needs to do is release a digital dollar and poof, all the competition goes away. But they haven't released one because they know that as soon as they step into this world, they will be at the bottom. They're going to be at the bottom. This is not a place they want to be. They're late to the game. China beat them to blockchain. Europe is even ahead of them in blockchain. There's islands in the Caribbean that are ahead of the United States when it comes to blockchain. So the United States has been dragging its feet because it benefits from the current status quo. Moving into a digital world where there's other options, that's not a safe place for the United States. So they're dragging their heels. They're not sure. They're hem-hawing. They don't know what to do. China's already got a digital currency. Others are already moving that way. And the U.S. is still trying to figure out this is not good for the world's largest economy to be so ambivalent upon a obvious innovative technology that's not going away. It's been adopted by every Fortune 500 company. Blockchain has. Again, many countries already have their own cryptocurrencies or creating them. The U.S. is a day late and a dollar short as usual, and digital currencies are not going to be. It's not going to be a great day for them when they move out into that space. It's really going to expose them, in our opinion.
All right. Well, Jerry Robinson, we really appreciate your time today and all your insights. Before we let you go, where can our viewers find you, and any last thoughts you'd like to add?
Sure. I just want to thank you for having me on. And I know everybody has their own opinions about so many different things, but I sure really appreciate having the ability to share my comments. And if folks want to learn more about us, we're happy to help. We really are an education service. So we teach on how to invest, whether you want to invest in commodities, or we were talking about cryptocurrencies, whether you want to invest in stocks, whether you want to invest in real estate, maybe you want to start a new income stream. Maybe you want to get involved in some other aspect of the world of finances. That's really what we're here to do. We're here to help you. And so followthemoney.com is a great place to go. Check out our free podcast, check out many of our free videos. And also you can check out our premium subscriptions. We actually have a special for all of your listeners. If they enter the word Liberty as a coupon code when they go to checkout on any of our memberships, we give a discount. And that discount actually, we're actually going to share that with your channel so that you guys can grow even more. So it's really a win-win for everybody involved. So yeah, followthemoney.com. And if we can be of any help, we'd love to talk to you. So don't hesitate. And of course, when you get there, you can also sign up for our free email newsletter. Be happy to be in touch with you that way as well.
Fantastic. Jerry, once again, thank you so much for your time, and God bless.
My pleasure. God bless you, man.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty in Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.